Hey, welcome back. Today is April 2nd, Friday, and on this post, I'll be telling you about the overall crypto markets, which includes Bitcoin dominance and Bitcoin price action, and see how they could potentially affect the overall altcoin markets. Before diving into Curve DAO token, CRV, USD, and see what has gone on in here, I'll be telling you about the bullish and bearish case scenarios for today, as well as the short-term price prediction on this market, according to what I'm seeing on the charts. Before I begin today, if you guys are enjoying this content, make sure to subscribe to this channel and like this video, as I'll be keeping you updated on the latest crypto setups on my watch list, regardless if it's a good day or a bad day. If you want to support me and don't already have a Webull brokerage account, you guys can use my referral link down below. They're still giving away 2 free stocks as of today upon a successful sign up and qualifying deposit of $100 US, and I will also receive a referral bonus if you guys sign up under me. Please also read my full disclaimer below. I am not a financial advisor and this is not financial advice. I am purely sharing my own speculation and opinions on this market. I cannot tell you the future, and you should always do your own due diligence before trading or investing in this market, as it's extremely risky and volatile. If you have any questions or comments, please do only leave them in the comment section below, but I will try my best to get to as many of them as possible. Now, see what exactly has gone on in this market. First, most importantly, I do take a look into Bitcoin dominance. It tells me where the money could be trending into, whether it be Bitcoin, altcoins, or neither. Today, we do have Bitcoin dominance down almost 1%. This breaks down to Bitcoin price action up over 0.2%. Total altcoin market cap up over 2.6%. Now, this is the upside of Bitcoin dominance trending downwards. I will usually see total altcoin market cap leading in gains ahead of Bitcoin. I usually emphasize Bitcoin dominance to trend downwards. That's generally speaking better for the altcoins on both the upside and downside. Because conversely speaking, if Bitcoin dominance was trending upwards, the upside of that, I will usually see Bitcoin price action leading in gains ahead of total altcoin market cap. Now on the weekly time frame here is my shifted focus for Bitcoin dominance, because we are making a lower low here now. Okay, and it seems like that possible bullish divergence I talked about at the beginning of the week is being negated, which is a good sign for now. Okay. Now, the key support I am looking at here would be the weekly 200 MA, currently about 59%. Okay. That's the key support for now. Possible bounce could still happen here. Okay. I don't usually see price action breaking resistance or support on the first try here. Bitcoin price action, as I have mentioned on the weekly time frame, there has been bearish divergence as we have seen 2 higher highs here. However, with 2 lower highs on the RSI. Okay, that's classic bearish divergence. I'm looking for a signal here of a higher high on the price action chart, along with a higher high on the RSI compared to the last one of about 75 here, for more of a confirmation that this bearish divergence is done playing out. On the monthly time frame here, we have been having bearish divergence for quite some time. However, it has still yet to yield a red candle, nor has it played out in my opinion. Now, not something to be losing track of, because look at the last 2 times where we had very high RSI readings here on the monthly time frame, and see what happens afterwards. Okay. Now, when Bitcoin pulls back, it could still have a bearish effect on the altcoins. That effect will be greater if Bitcoin dominance was trending upwards. Okay. On the daily time frame here, key resistance 60K, next resistance about 62K, slightly under. Key support daily 21 MA, the blue line. Next key support daily 50 MA. Let's go over to CRV, see what has gone on in here. I'm going to take a look from the monthly time frame down to the daily, which I consider to be macro time frames, and see if we have any overbought RSI readings or possible bearish divergence scenarios. Monthly time frame here, we are okay. We don't have a reading here, so let's move on to the weekly, where we are at an RSI reading of just over 54 here, so not in overbought territory. 3-day time frame, we're currently about just under 66, not in overbought territory as well. However, if the price action was to make a new high here, it does need to beat the last RSI reading of about 75 just to be safe here to negate bearish divergence. Daily time frame here, we're currently about 61. And very similar thing could be said about making a higher high and negating bearish divergence here, as well as what I said on the 3-day time frame. Let's take a look on the 3-day time frame here. Let's do a recap and see what has happened since last time. Okay, last time I did say that there was a possible symmetrical triangle pattern that was forming, and I was lacking that second set of swing down. We did get that second set of swing down, okay, somewhere over here. However, this does look like a more lopsided symmetrical triangle pattern to me. So I am leaning towards what it looks like to be more valid right now, which is a cup and handle pattern. So I am going to be invalidating the symmetrical triangle pattern. Now this cup and handle pattern could also be seen here on the daily time frame, with the bigger rounded bottom here to be the cup, smaller rounded bottom to be the handle. Okay, neckline of this pattern would be about $3.70. So still a bullish pattern here. Okay. Now measure target, which is taken by the top of the pattern to the bottom of the pattern. Top of the pattern here, like I said, it would be $3.70 because I've seen quite a bit of resistance at this level, and I can also connect the candles here, okay, from the left to the right side. That's the neckline, $3.70. The bottom of the pattern would be about $1.60 approximately. So difference of $2.10. Adding it back on top of $3.70 will give me approximately $5.80 measured targets. Now, measured targets are theoretical approximate targets only, may actually be different in real life price action, more or less. Let's take a look into some of the key resistances and supports relevant to this price action right now. Key resistance right here would be the $3.70 neckline out of this pattern, followed by a very short resistance right here, right above that neckline here, which would be about $3.80 fit level area. So these two levels of resistance are going to be very close to each other. Okay. After that, I'll be looking at the resistance here of a fib level at about $4.80 fib level area to be the next resistance. Okay. I could also expect some resistance from past wicks as well. $4.40 price range. Also going to be looking at $5.80 after. That's basically after the measured target there, if price action gets over the measured targets. So after the measured target, I'll be looking at past trading history there from for past resistance there as well, for indicators of resistance possibly. So $5.80, $6.20, and a very long wick up here. So I don't think that's really very relevant right now. That's about $25. Okay, so that's way out there. So those are going to be the possible resistances I'll be looking for, possible key resistances I'll be looking for. We can also go into smaller time frames and look for past trading resistance as well. But right now, I'm going to stick with the higher time frames here. Let's go on the key supports. Key supports immediately would be this fib level area, about $3.15 fib level area. Next up would be the daily 21 MA, currently about $2.77. Next, the daily 50 MA. And of course, then the $2.50 fib level area. Those are going to be the key supports I'm looking for. Let's see if the 3-day 21 MA is also beneath us as well. That's currently about $2.65. The 3-day 21 MA would be key support as well. And the weekly 21 MA is pretty far down there. So now let's take a look into the bullish and bearish case scenarios here. Bullish case scenario, price action breaks above this neckline at about $3.70 and go towards its measured target, minding the resistance levels I have just pointed out. Bearish case scenario, price action actually breaks this fib level area right here. That's the next level of key support here. And also, that would be the low of this handle right here. Okay, so I don't think we should be closing below this last low here, which was the low of the handle part of the cup and handle pattern. Currently at about, let's just say $3.10 to be even. Okay, I don't think the price action should be closing below $3.10. Otherwise, this pattern would need to be reevaluated because right now that is the low of the handle of the cup and handle pattern. So bearish case scenario, price action breaks $3.10, gets a daily candle close below $3.10. Then I would say that this pattern is up for reevaluation. Now, these are my bullish and bearish case scenarios for today. Let me know if you found it helpful. Give me a thumbs up if you did. Let me know your agreements, disagreements, feedback. I love to hear them. Hope you match your risk carefully, and if you'd like to see any more of my most recently uploaded videos on YouTube, you guys can check out my links up here on YouTube. See you next time.